Wow, I'll tell you, did you guys see that little recap ensemble we just put together there? That's impressive. Good job, Andrew Parker. I'll tell you, actually, I'm maybe giving credit to Parker too, but both of you guys back there, love it. Anyway, a lot of action again for August 20th. You can't really complain. Every single day we come in, and every single day, every downtick in the market, everyone's saying the market's over. Here comes the correction. Get out of Dodge. Pig paper is blowing up. Growth slowing. Blah blah blah. P.S. Dips aboard. Money gets rotated, and there's a lot to like. As far as today, I hate to say it, I did sell my Apple. I'm sorry. It's been a great 3-week trade. It's been unbelievable. It's helped my Ironman training the week before, the week after, made August much more pleasurable. Sometimes you're pleasantly surprised. I wasn't expecting a 60-point run, but you never have to expect anything. You do the right trades, you position yourself the right way, and you can be pleasantly surprised. So today I entered with Apple in my swing account and in my cash flow account, and today I leave with nothing. Doesn't mean it's a short. Doesn't mean it's game over. Doesn't mean if you're a macro investor, you get out of Dodge. All it means was it's extended from all the moving averages. It's been a nice move, trying to bring a little risk down, and I'm very happy with what I took out of it. The whole morning I trailed it, lifted my stops, and I think last sale might have been close to 663. So gaps up tomorrow, fine. All is well and good. Let me just quickly go to Apple before I go to the indices. Unbelievable move. You want to talk tactics, you don't get much better tactics than this. This was your earnings miss. 2 days of consolidation, didn't break below, boom, 580.80. Here's your 3-day beeline to resistance. I even remember getting a cute little short that day, and thank God that happened because that actually got me on the right side of this thing again. Here was your swing long around 603. When it went below 602.72, came back above. That's when we talked about putting the swing trade on in Apple. And then this is when we had on the price point sheet getting above this level here. This level was 620. I remember talking about it. Had a nice move to about 625. Got from tier 1 to tier 2, back to tier 1, back to tier 2 when it recrossed above this pivot high here of 624. Remember that day it went as high as 630. Got another day. This was another day to sell. We sold it. Got back right involved here. The low was 627. Didn't get down to the 8th day, but we didn't have to wait for it. Then you could have added when it crossed this 634. I think we listed that also. Then you had your 638 pivot. Then you had your 644 pivot. And now look where we closed at 565. So with that said, you never know where it's going to go. And it's just up to you where you want to pick your spots to buy and sell it. Now, if you didn't buy it on Friday at 644 at the 52-week high, that last pivot trade, you have no right buying it today above 660. Even if it goes higher, it means you didn't count. I just showed you 6 calculated points to get involved, and here we are, and I go out flat. Big deal. Let's move on. SPX, you take a look. We talked about it. We tweeted about it. Said that we have 2 different trends here. This is the macro trend since June 4th. Followed it all the way up. Here's your accelerated trend. Remember that jobs day? What was it? It was August 3rd, and then here is your move to the upside again, 7-day tight range. Here's when we broke above 1410. Nice move above it. Today on Bloomberg, we talked about holding above 1410 to make it easy for intermediate traders to hold 6, 7, 8 positions, and that's what we had. We're hovering right in front now of 1422. If you were short this market, rolling it up, not only are you missing great trades, you're definitely in a lot of pain. And if you just think that we have to sell off, you know what? You're thinking a lot here, guys. And even if we do get ours, whatever it is, if this uptrend breaks and we get a move back down to retest 1392, you missed out on good action. There's been a lot of action across the board. Every day there's some new cash flow to be made. Holding positions have been, pretty key here. This morning, nice up move in the casinos. We talked about the capitulation lows in LVS, the bull flag from the lower level above 39.65. It shows you tactically you can make a lot of money. Okay, and here you go. This was your capitulation low right here. You want to put some volume in so you can actually see it a little closer up. There you go. Boom. Tweeted about it, talked about it. Here is your add-on buy when it went above this 38.30. And then more recently, I think it was Wednesday or Thursday last week, I'm like, now's the time to get back involved above 39.65. And now look where we went to 43 today. Now is probably time to sell. I came in today with a lot more than I'm leaving today. I have a little, I have a feeler left. We could definitely pull in a bit. Nice little trade. And then knowing the group, I also took a little MGM. Not a blockbuster move, but above 1015, 1020, it did hit 1077, nice 5% or so. Guys take a year to make 5%. We look for it in a lethargic trade. Usually we get a lot better than that. Then you want to talk about the banks. Today, the banks finally had a bit of a move. I wouldn't say it was really powerful, but Goldman Sachs was a good target from the price point sheet of 104, went to 105.5. Sperling was on that. I traded JP Morgan and Bank of America. Not the greatest trade, but they gave a little opportunity today. Bank of America on Bloomberg, I went over a call spread strategy. So you want to look at Bank of America. A lot of people are talking about the fourth quarter move, which I do think we have. And I think that if you want to be in some banks, I think this is in the game to at least get back up to test this 9 or so, or maybe even back to the highs of the year. If you remember, this was my bank target coming into the January effect when it broke above this $6 range. This was a great trade coming into the new year. And then remember this tight pattern here, we talked about it. Look at this explosive move above 820, went to 10. Yeah, nice pull-in and held 7, and now we're right back at resistance. I do think you could get this move. So, to get involved, I didn't give a blockbuster trade. It wasn't like something that you're going to get paid in 3 days. I said, what you do is you buy the $8 Bank of America calls. I think they were like 70 cents, and sell the January 10s for like 20 cents. It'll cost you 50 cents or 55 cents. And if you're right, you hold Bank of America, gets to $10, 8 to 10, 2, subtract your cost of 60 cents. You just made $1.40, almost a triple. Not so bad, holding Bank of America. And this way, at least your risk is premium paid. So if you are a bear and you think the world's going to fall apart and they're going to crush the banks, you lose your premium. If we do get a move to 1450 to 1470 come the end of the year, which I do think we can get, who knows, we might have a little pull-in before now and then, but that's why you want to go out a few months with this option strategy, because when they come after the banks, they come after them. And I do think this one has 2 points in front of it, and that could be a decent trade. As far as cash flow for today, Goldman Sachs, nice little move. Above this inside range here. This is why we listed it. This 104 was hard to get above. Finally got above it. Now the 200 days right in front. Let's take this volume back out of the way, because I just like the way it looks without the volume. Just, aesthetics. Nice little move here. Goldman, this time it failed. This time it held. Not so bad. JP Morgan still, getting itself together. One of these days, it's going to trade into this gap, and that'll be a nice trade. I'm long some, and I'm going to trail it. At this point, definitely some better things to be long, but looks like it's in the game for a move. And then today, finally, we were pleasantly surprised with silver and gold. I like when gold leads silver because it means there's more power behind it and more oomph, but whatever. We've been targeting both. I've been long silver, not even gold. And today, finally, we had a real trade in silver. Look at that, guys. August 20th, not much going on, and pow, nice trade in silver above this recent resistance, squeezed some shorts, and it was a nice, unexpected quality trade. Next level now in silver is, what is this, 28.76, okay, and then you have 29.02. So we'll see what happens here, and then you have the 200 up there, but overall, first day, it really woke up and didn't fail. Gold didn't get going yet, but it's coming into a big area right here, so I took some long with it. Above, what is this? Gold above 157.82, 158.25. You could see a quick move to 159.64. Looking good, looking better. Something to do in August. And then there's not really much to keep diving in. I think Google's resting, Amazon's resting. Everything's taking its turn. Some things are a little bit weaker. Guys were asking me about Walmart. Everyone's all scared about it. Like, oh my God, is a trade in Walmart done? Like, listen, 62 to 74 to 77 the target. Here's your earnings. I like the way it kind of held in there today. Still above the 50 day. If you didn't take it into earnings, you don't want to buy it back. You buy it back versus level, and I think it's fine. Can it get to 68 if the market corrects? Yeah, but I think that'll be viable. But at this point, it met our goal way before earnings, so it didn't even have you making any decisions going into it. And then today, we listed Facebook as a cash flow 80-20 trade, right? Broke 1980, what was it, last Thursday? The option strategy we talked about that had to be closed out at 19 on Friday, yielded you 30%. We did that play on Bloomberg also. You guys, I know a lot of people watch CNBC. I love both networks, but lately I've been on Bloomberg a little bit more. So, we're trying to post some of those segments, but we went, everyone's asking, where is the segment? Where is this? Where is that? And not enough time in the day to keep posting everything. We just go and we keep our relationships open. But anyway, Facebook went to 19. Nice trade. We did the put spread, buy the 20s, sell the 19s. I think the cost was less than 70 cents. It could have paid off $1, 30%. That was done. Today we talked about 19 as the pivot. Went below to 1875. Couldn't get any downside follow through. Squeezed. Red dog reversal right there. I did not play it. Guys in the chat room were talking about it. Jim was all over it. It doesn't look much, but again, a summer day. What was this, 4 or 5% at least? Here it is. You take a look here. It traded briefly below the 19 area, and it went as low as 1875. So once it recrossed above 19, you buy 19, 1875. That's a quarter risk in a stock that's been battered and bruised in the worst IPO managed situation. I think of this, whatever, decades since the .com crap, whatever. Anyway, that's not nice. So PS, nice little trade here. Kind of similar to this one. Remember this one? When it traded below 25.76, went to 25.52, you had a 20-cent stop, and then you saw a nice move. Now that everyone in the world hates Facebook and grimaces when they talk about it, maybe that's when it goes higher. So today, one entry, we'll see. You go take a look at the 5-minute chart. It was pretty powerful, as far as a day trade. And here it was. The reason why we love 80-20 trades is because it traps shorts, gets people out of their longs, and right off the bat, it went below that 19. Couldn't get any follow through to the downside, came back up, and then look at this wide range bar if you were ready for it. Went above 19 and did a beeline to 1960. That's 50 cents. Doesn't sound like a lot, but percentage-wise, it's a nice trade in August. Then it held higher, didn't pull in, and gave you another trade to 20. So as a tactical play from the price point sheet, was worth a look. And then you look at something a bit more quality, LinkedIn. I know we're all on our toes about it. You look at the daily chart, still tight. It's definitely worth something to be a little bit, careful about. But all in all, if you look at the gap up from earnings, you had a little follow through, and then it came in. It still held a decent amount of it. Still above the 200-day. So today I bought a little back. Really, for it to get going, it's going to have to break this 104 to 106 to the upside. Maybe if that was the bottom in Facebook for a while, some of the bears in the whole area will get away from it. And overall, this still is the most quality out there. And it's been hard to do anything in the midst of the media frenzy about hating social media. So we'll see. This looks okay. So all in all, there's a lot to like in the equity markets. If you were an investor in Apple and you've been long it, every single investor in the world in Apple is profitable right now. It closed near the highs of the day, all-time highs. You're a stock picker, you use a little common sense. Products are great, company's great, low PE, technically working well. You're there. Equity plans do work on every time frame. If you were a swing trader, there were a few entries. Friday gave you a cash flow entry through 644. Close strong. Momentum rules say take it. So, a lot of people complaining about a lot of things. At this point, no one needs to hear it. No one likes a complainer, and everyone wants a little optimism. And although we're all realists, there is a lot to like. If you're watching the technicals, watching the price action, you listen to all the commentators on T3. Everyone's got different styles, and there's been a lot of money to be made in August. It came out of nowhere. Sometimes you can be pleasantly surprised as long as you're in a place to win, as long as you're seeing things clearly, you're not stubborn, you're not opinionated, there's money. At this particular point, no need to be all in, but every time I have one foot in the door, one foot out the door, it's keeping me in. We keep holding higher. We keep seeing rotation. And I entered today with 7 positions long and 1 short. I think I leave today with 8 positions long and 1 short or something like that, and a few different ones. And I'm trying to keep my wrist down. I want to relax. But when the action's there, you go after it. And again, keep it small. Don't fall asleep behind the wheel. But as of right now, there's still a lot to like in the equity markets. Have a great night. Scott Redler, T3 Live. See you tomorrow. Call with Brittany. Hasta la vista.